right, bull runners, welcome back to the channel. So I have a lot to talk about in this video. First and foremost is Bitwise Asset Management has confirmed that trading for 2 Ethereum futures ETFs is taking place today on October 2nd at the time of making this video. And there were also several other Ethereum futures ETF exchange traded funds that are set to launch today. So a possible positive sign right now for the crypto market. That's why Bitcoin's rallying and we see the market moving forward because everyone's been waiting to see whether the SEC will approve a true Bitcoin ETF, right, for a spot Bitcoin ETF in the coming months. And so people are buy the rumors and then they sell the fact. And so leading up until an approval of a spot Bitcoin ETF, the markets are expected to rally. Now, obviously, this is not financial advice. Don't buy, don't sell XRP, don't buy or sell Bitcoin or any cryptocurrencies. Watch this video for educational purposes only, but Bitcoin has risen for 4 straight weeks and it's posted the first positive September in over 6 years. And it's now up over 70% for the year. And Peter Schiff, who's known as a massive gold bug, he just posted on Twitter saying that gold is down again as clueless traders cling to the false narrative that rising bond yields are bearish for precious metals. And in contrast, they ensure not only a hard landing, but a financial crisis, which skyrockets federal budget deficits, soaring unemployment, and massive QE, which is quantitative easing on the horizon. So inflation is bullish for precious metals. And as you guys know, Peter has been a massive Bitcoin hater. He's just been bashing Bitcoin for a while. And that's obvious because, the guy sells gold for a living. So he stirs up controversy. He hits the pendulum. If you haven't read Reality Transurfing by Vladim Zeland, he talks about the pendulum. When you hit a pendulum, it swings back. And so in marketing, if you swing at a pendulum, which in this case for him would be Bitcoin, then all the Bitcoin bulls are going to hit back, which is going to drive sales for his gold company. And so it's smart marketing, but it's funny just to see the responses to his tweets because Bitcasso responded saying that gold is down again because it's being manipulated. Plus you have an unlimited supply. Just give up. Finally buy Bitcoin. Don't let your ego affect your future. And I know your past affected you for not buying Bitcoin for less than $100, but it's never too late to accept that you were wrong. Good luck. So what do you guys think about that? Then Peter responded saying gold does not have an unlimited supply. That's nonsense. It's Bitcoin that is heavily manipulated. That's why it's up so much today. And then Wealth Ratio said, if it's not unlimited, then what is the total supply? What is the total number of gold ounces there will ever be? And unlike gold, I can tell you exactly how much Bitcoin there will ever be in existence, and that's 21 million. And then Lunar Chip added on to the conversation by responding, and what happens when the synthesis of precious metals becomes an abundant process? When we can manufacture gold like we do plastic, what effect does that have on humanity? And what happens if we find out that gold has a 10x the amount of reserve than previously thought, or more than that stored in reserves? Now they're making, lab grown diamonds too. So who's to say that they won't do the same thing for gold?
And they are the same. CVD diamonds have the same physical, chemical, and optical properties as the natural diamond.
Now, don't get me wrong here, guys. I'm bullish on gold. I'm bullish on silver and other precious metals, specifically silver because it's actually used in electronics. It's used in medicine, solar panels, battery, water purification. The list goes on and on. So silver is an actual usable asset. So to say that, Bitcoin is better than gold or gold is better than Bitcoin or vice versa, I think is a stupid argument to make because I personally hold both. I believe in the best of both worlds because I'm bearish on the dollar, right? So I think it's not a matter of what's better. I think it's a matter of what are you doing to prepare in the case that the dollar is declining, because I'm bearish on the dollar long term. Now I'm an American. I believe in the future of this country. However, I don't ignore the facts. I'm not just blindly tucking my head in the sand here. The dollar long term is not holding value. So for the rest of my life, the safest assumption, according to Charlie Munger, who's Warren Buffett's best friend for Berkshire Hathaway, guy's very, very successful. Well, he says the safest assumption is to assume that the dollar is going to zero because it's proven to go down in spending power over the past few decades.
Inflation is a very serious subject. You can argue it's the way democracies die. When democracy dies in Latin America, inflation is a big part of it. So it's a huge danger once you've got a populace that learns it can vote itself money. If you overdo it too much, you ruin your civilization a lot. And so, of course, it's a big, long-range danger. If you look at the Roman Republic, even after they went to a empire with an absolute ruler. They inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-range danger we have, probably, apart from nuclear war. Well, I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis. What brought in Hitler was the combination of the Weimar inflation, where they utterly destroyed the savings of the middle class in Germany, followed by the Great Depression. It was a 1-2 punch. And Hitler came in, crazy demagogue, with 40% of the votes, and pretty soon we had a dictator hell-bent for world war. So the history is not pleasant. And Germany was a very advanced and civilized nation, the Germany that Hitler took over. The interesting thing about that was little Albert Einstein, a little Jewish boy, got his entire primary education with the insistence of the Catholic Church in Germany. Now that is a very civilized nation. So if you let your nation deteriorate too much, what you get is a Hitler.
And why is that? Well, what's happening? Well, it's what the Federal Reserve and what the Treasury is doing. So let me know if you agree or disagree based on what I'm about to share with you through the rest of this video, and why in the comments below. And if you agree, like this video. As always, if you disagree, like this video and share your thoughts below. So the facts are insurmountable that the dollar will not last as the world reserve currency, and there's less than 20 years left. A world reserve currency lasts, what, roughly 70 to 120 or 100 years, somewhere around there. So the dollar is on year, what, 79, almost year 80. So some would argue that there's even less time before the entire system implodes, and we will have to go to a new standard, which XRP bulls are claiming will benefit XRP, and it'll be the XRP standard global reserve currency. We talk about IMF, International Monetary Fund. We talk about Bank for International Settlements. All the videos that we've been making on this channel, guys. And so when we talk about other news out there about what's happening with, the government specifically in the United States, well, they didn't shut down yesterday because there was a vote on something called the continuing resolution. So I'm going to circle back to crypto, but I want to talk about this really quick because the continuing resolution keeps the government running for a little while longer. However, 2 Republican senators, Roger Marshall and Bill Hagerty, voted against the continuing resolution. And the reason why is because they wanted more money to be spent on making the U.S.-Mexico border more secure, and they believe that the open border and the illegal drug fentanyl coming in are big security problems. Now, I don't disagree with that. Anyone that does is probably a fentanyl huffing commie over here. So despite their votes, the government didn't shut down this time, but there's a catch. So the catch is that the Department of Defense has almost used up its money in funding Ukraine. So please tell me in the comments below, why does so much money need to go over there? What are they protecting over in Ukraine? They can manage for a bit longer, but they will need Congress to pass a bill which will allow them to keep funding Ukraine for all of this nonsense. Now, looking ahead, what Congress has until November 17th to figure out the differences and avoid another government shutdown. But it's not, easy because the House and the Senate have different ideals about how to spend money. And just so you know, Congress always seems to run out of money around September 30th. And this year, they had plenty of time to sort this out, but they didn't until the last minute, just like what happened with the debt ceiling limit when Janet Yellen was urging and begging Congress for more money.
Yes, early June is when we will run out of cash.
Spare some change. Leave me alone, I don't have any change.
Well, really, that's it. We've been using extraordinary measures for several months now, and our ability to do that is running out.
Oh, now I feel bad. Here. Change. No, that was really all the change I had.
Our current projection is a day will come when we're unable to pay our bills unless Congress raises the debt ceiling, and it's something I strongly urge Congress to do.
Change? I don't have any change.
Of course, it's appropriate to have negotiations about the budget, about spending priorities.
Change!
So lastly, some Republicans are not happy with Speaker McCarthy because he changed a deal on how much money to spend earlier this year, and that change caused some problems, which might even affect his job. And as you know, we need several, Billy over here to fund Ukraine. Let's just send $1 million to Hawaii. So it's crazy, guys. There's only 2 words that we can use to define what's really going on here, and that's incompetent leadership. I've never seen something so disgusting in my life. So for now, the government didn't shut down, but there's still big disagreements and challenges ahead in how they handle money and security issues. So expect another potential shutdown in the middle of November as they sit around and basically pee on each other until the next meeting deciding what to do. So while the debt limit has no cap until 2025, more funding will go to Ukraine, which will keep devaluing the dollar and fanning the fire for the crypto market, for the precious metal market. So bringing this back full circle, Peter Schiff also posted that we are still early in the biggest bond market crash in US history. In every government, corporation, landlord, and family that has been relying on cheap debt to survive will die. Cheap loans with the low effective federal funds rate. And with the rate rising, when the Fed tries to save their lives, it will kill them with inflation as the cost of living skyrockets. And according to the Kobisi letter, since the Fed started raising rates, a record $870 billion of deposits have left US banks. And that is by far the biggest deposit flight in US history. And it's not even close. And just 3 banks, the amount when those bank runs took place was larger than all the banks in 2008. So it can't even be compared. There's nearly $73 billion per month. And that's about $2.5 billion per day leaving banks. Think about that. And the 10-year note yield on treasuries hit 4.7% for the first time since October of 2007, right before the subprime mortgage crash. And the 10-year note yield is now up 430 basis points since the March 220 low. And while treasury yields hit a new 15-year high, seeming every day the odds of an additional rate hike, are down right now as they pause on the rate hikes. However, a long pause throughout July of 2024 is now expected with potentially one more rate increase this year. So this comes with massive issuance of US Treasury bonds to cover deficit spending, which are flooding the bond markets and sending yields much higher right now. So will we see 8% mortgages this month, let alone this year? You guys let me know your thoughts. The real estate market, needless to say, why keep your money in a bank when you can make, 5% risk-free in a money market fund?
We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
So interestingly enough, as sketchy as that sounds, large banks continue to pay close to 0% interest while they loan out your money still through the fractional reserve system. And, they're banking more money. If you watched my video the other day, I talked about how much Chase Bank made, when they raised the effective federal funds rate. Chase is taking your money, they're loaning it out to other customers at high interest rates, and they're only keeping a fraction of your money in reserve. And Chase, they released their first quarter revenue, and it rose by 25% to $39.34 billion, driven by a 49% rise in net interest income to $20.8 billion, thanks to the Federal Reserve's most aggressive rate hiking campaign in decades. So shares of the bank rose 7.5%, and that is the biggest upside move on an earnings report in more than 20 years. They made more money. And so why aren't banks raising deposit rates? Whereas money market funds have seen nearly $1 trillion of inflows over the last year. So with high inflation and the regional banking crisis, they've become a no-brainer. Money market funds are what investors are choosing right now as the new safety trade compared to cash just sitting in a savings account that is virtually yielding them no income. So
the money in your account, it didn't do too well, it's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Think about what's going to happen. And my question for you is this, all right? Think about what's going to happen when the gross debt climbs to over $50 trillion the next decade and the dollar loses, best case scenario, a bare minimum of 20% of its value. That's if the Fed is 100% successful at getting inflation down to their 2% target, meaning that every year the dollar loses 2% of its spending power. So if you take 2, you multiply that by 10, that's 20%. So by 2033, over the next decade, the best case scenario is the dollar loses 20% of its spending power in terms of goods and services that you can buy in the store. If you're gonna buy eggs, you're gonna buy clothes, you're gonna take your car through the car wash, you're gonna buy gasoline. And so that's best case scenario, guys. So share this video with anyone who's ever told you that buying cryptocurrencies is too risky. If they've ever told you it's too risky, share this with them. And I'm curious, for those of you that have that got this video shared with you and you told someone it's too risky to buy crypto just because you don't understand it, answer this in the comments below. Okay, if the best case scenario for the dollar is a loss of 20% in spending power over the next decade, and the Federal Reserve has told this right to our face. That's not my opinion. I just share facts here. And then I'll share my opinion with you guys as well too on what I believe in, because I do also, have cash. I have precious metals. I have real estate. I have crypto. So I share my thoughts as unbiased as possible just based on facts. That's where I make my opinions up. So over the next decade, 20%, that's best case scenario. Okay. It's most likely going to be much worse than that for the dollar, because the chance for a best case scenario due to interest rate hikes is like golfing in a thunderstorm expecting not to get wet, let alone struck by lightning. So the soft landing is the Fed, swinging in this thunderstorm as they raise rates, hoping not to get struck by lightning for a hard landing. So the crypto industry over the last decade, it's gone up regardless of short-term volatility and bear markets. Some people are like, well, isn't Bitcoin down from the all-time high? Yes, but that's because you're thinking in short term. You're thinking in days, months, or even 1 year. We got to think in decades here. All right. So the crypto industry has gone up the last decade, and regardless of short-term volatility due to the gross debt, there's a high likelihood of it going up the next decade. But then the question is, well, what if it goes away? What if Bitcoin goes away? Guys, Bitcoin is regulated by the CFTC, which is the Commodity Futures Trading Commission, meaning Bitcoin is officially a commodity like crude oil, gold, wheat, natural gas, etc., except it's a digital commodity. So the reason why people are skeptical, which makes perfect sense, is because you can't hold it. It's like if you're going to buy coffee as a commodity or wheat or gold, you can actually hold it, or like tobacco or alcohol, you can hold it. So if you're going to invest in land, real estate, right? You can actually invest in something that's real, it's physical. So I completely understand if you can't hold it, what makes it real? Well, let me ask you this in a little bit. Okay. We're going to talk about Apple. We're going to talk about Microsoft, and we're going to talk about stocks of these companies where you can't actually, even see the stock. And also when you think about XRP is not a security by law, and it will be used by massive banks via Ripple's X Rapid product for liquidity. So these banks don't need to rely on pre-funded Nostro and Vostro accounts for cross-border liquidity. Instead, XRP could be used for that. And so what do you think is going to happen to assets like XRP, Bitcoin, gold, silver, and even real estate over the next decade when the effects of the rate hikes are really being felt by everyday people? Inflation is really felt, and all of a sudden, all of this money that's being put into the system has to flow somewhere. Well, where's it going to flow? Even if they do stimulus checks again, if there's another shutdown, okay? A big argument is like, well, look what happened to crypto during the pandemic. Well, absolutely. Look at what happened to everything. Stock market crash, crypto market crash, everything crashed at that time. But then it bounced back from that because those stimulus checks, where'd they go to? Well, they went from the hands of everyday people to cell phone bills, utility bills, mortgage, food. Who owns those companies where those bills go to? The elite own those companies. What did the elite do with that money? They put it into the markets. And so the rich get richer, the poor get poorer. And what are the rich doing right now? Well, BlackRock, okay? The company that owns the media. You got Fidelity, you got massive banks, massive institutions, these hedge fund companies that have VC money. Well, they're applying for spot Bitcoin ETFs with the SEC because they know something that the average retail investors don't know. So how will people even be able to survive when the cost of living continues to go up while the inflation adjusted minimum wage keeps dropping? Because when we look at adjusted for inflation, the 2023 federal minimum wage in the United States is around 40% lower than the minimum wage in 1970. So although the real dollar minimum wage in 1970 was only about $1.60 in terms of US dollars, when expressed in nominal 2023 dollars, this increased to $12.04. So that's a significant decrease though, even though it's an increase. So I'll explain what that means because of spending power due to inflation. So the federal minimum wage in 2023, is $7.25 an hour. And actually that's how much I made back in like 2018. So it hasn't even changed since then. So minimum wage hasn't gone up. So because housing, food, healthcare, transportation is becoming increasingly expensive over time, inflation is eroding the value of money. So you need more dollars to buy the same goods and services. And when you adjust this amount for inflation to the equivalent purchasing power back from like 1960 or 1970 in 2023 dollars, it becomes $12.04 that's needed compared to $7. So that's a difference of 40% lower, all while average rent prices have increased about 8.85% since 1980, consistently outpacing wage inflation by a significant margin. So an estimated 45% is the average rent to income ratio. Right now, 45% is the average rent to income ratio, meaning that on average, people are spending approximately 45% of their income that they earn from their job on rent. That's crazy. Looking back in 1970, the median rent to income ratio was around roughly 20%. So that's why you see college graduates, still living at home with their parents, because it's virtually impossible to own a home with massive student loan debt and a salary that can't even cover basic necessities, on top of their student loan payments. And so it's making it insurmountable, and that burden of debt weighing on college graduates is almost impossible to get off. And so there's an old saying, it comes from Jim Rohn. This is a guy that I listened to when I dropped out of college. Now I'm not advocating you to drop out of college. I'm advocating you to finish what you start, but be smart with your decisions here. And here's what completely shifted my mentality on the world. And this is how I became a millionaire before 30. He said that formal education will make you a living, but self-education will make you a fortune. Now, you can make a living, which is fine, but you can make a fortune, which is super fine. How do you want to live? Do you want to live fine, or do you want to live super fine? I want to live super fine. I don't know about you. You got to operate as if you have one life. Even if you believe in reincarnation, you got to live this life like it's your only life, right? If you believe in reincarnation, okay, cool. What if you came back? Let me ask you this, for those of you that believe in reincarnation here. What if you were reincarnated as your kid or your grandkid? Wouldn't you want this life to be the life that sets up your future life as your grandkid with the right skills and the right knowledge and the right resources? Of course, right? So why not do it now for your future self? Don't just think, I'll be reincarnated, so it doesn't matter. It absolutely matters, because you'll probably be reincarnated as a grandkid. So the saying shouldn't be formal education will make you a living, but self-education can make you a fortune. It should now be formal education won't make you a living due to inflation, and self-education is the only way to make a fortune, because too many people are trying to be PC. They're trying to be politically correct in fear of offending people by treading on water, saying things like, as long as you get a degree and you work hard, then you'll be all right. Then you'll be able to make a living. And the people that are saying that, they aren't all right. They're not making a living. They're struggling to survive. And so they're just saying stuff that isn't backed by fact. And so when you say what people say, you do what they do, you get what they get. And so back then, that saying was actually true in the 1900s. But think about that, guys. 1990 was in the 1900s. Doesn't the 1900s seem like a long time ago? 1990 was the 1900s. So if you got your degree in the 1990s, consider that the end of the college degree era. It's the end of that era, because look at this. Microsoft and Apple, circling this back around, they were founded in the 70s, and the internet didn't really become mainstream and didn't become popular until 1995. And then all restrictions on commercial use of the internet were lifted in 1995, leading to a rapid growth in the number of users worldwide on the internet. More specifically, if we're talking facts here, in 1995, 16 million people connected to the internet. By 2000, just 5 years later, there were roughly 300 million. And by 2005, another 5 years later, there were more than 1 billion people on the internet. So everything is different for how people access and disseminate information in this day and age, where they used to rely on media like newspapers. They used to rely on, billboard ads. They used to rely on, even go back further than then, you had to send letters through the mail. You even go back further than then, you had to get on a horse and you had to ride across the country to deliver a message to a king in another nation. And if the messenger died, they didn't even get the message. Then it would take another 3 months, 6 months, however long it would take, where the message wouldn't get delivered. Nowadays, you go on Facebook, you can send a message in a second. You can send a text message really fast. If you watch the documentary about BlackBerry, you watch the documentary about Apple, you watch the documentary about all these media companies and how information is spread nowadays. Well, the blockchain, you look at the new revolution of the internet, Web 3, Web 2, right? The internet as we know it, well, there's Web 3 and the blockchain came out in 2008. That was only 15 years ago. So when we refer to the second half of Jim Rohn's quote that's saying self-education can make you a fortune, well, what does that mean? Well, formal education is, preschool through college, right? You're getting formally educated. You're getting indoctrinated into that system to go into the workforce to abide by the rules, and you live that lifestyle, 40-40-40 plan, whatever you want to call that, right? So whether you're working 9 to 5 or 5 to 9, but you're doing that until you retire, well, the retirement age is increasing because minimum wage is not changing. The spending power is going down of the dollar. And so the retirement age is virtually going to be you're not going to be able to retire if you don't focus on self-education. So self-education is what you do outside of school. It's what you're learning. It's what books are you reading. So the most popular books that you can possibly read, Think and Grow Rich is a big one. The Power of Your Subconscious Mind, The Science of Getting Rich. Okay, How to Win Friends and Influence People, The Magic of Thinking Big. There are a lot of books that you can read for your self-education that can make you a fortune, because your life is controlled by your mind, right? Your actions and your decisions are controlled by your thought processes and your unconscious mind, because you have your conscious mind, which is like 10% or less above the water, like the iceberg. Then you have the 90% or more that's below the mind, is your subconscious mind. So there's a reason why formal education, you had to go to school when you were a kid, and they indoctrinated your unconscious mind into that system to where you are programmed to believe things a certain way. So in order, in a computer system, your mind's like a computer, right? It's like a hard drive. And so when you program a computer and you type something into Google, it spits back information that's been programmed into it. So if I were to ask you a question like, are you going to become a millionaire? And you're like, it's too good to be true. Well, you're spitting back information that was programmed to you from 0 to 7 years old. And so when we talk about crypto, when we bring this full circle to something like XRP or like Bitcoin, if you're like, oh, that's too good to be true. Well, let me ask you this. Have you spent at least 10,000 hours researching the industry to figure out if that programming statement that has been told to you by somebody else is actually true or not? Or are you just spitting that out because you're too lazy, you're too ignorant, and you don't want to research it yourself? Now, be real objective here. Don't take an opinion, because for me, whether crypto stays around long term or goes away, I don't care, dude. I don't care at all. What I care about is how do I preserve my wealth, my knowledge, my health long term, and spread information that is going to positively impact people for the future. So whatever that industry is, I believe it's blockchain technology, distributed ledger technology. Artificial intelligence is another massive one. You have these massive industries out there that you can dive in and you can start self-educating yourself about. So whether it's blockchain or not, doesn't matter. Educate yourself, spend time on self-education on one industry that's going to be the future. And it's easy to spot these industries. Go on ChatGPT and ask ChatGPT, what are the industries of the future? And it'll tell you that. And then you pick one of those industries and you master that. And then you put your 10,000 hours into that. You take it seriously, because you know what we're doing. We're backing up our truck all the way to the bank. We're grabbing the bags, packing them, stacking them, leaving no bags left behind, because the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. 2% target. Even if they hit that 2% a year, you have 100,000. To put that in perspective, okay? You put $100,000 in your bank account in the year 2000, right after the good old 1900s are over. Now we're in the 2000s, okay? And so you got, until we get to the year 3000, how long is that going to take? You got your whole life ahead of you in the 2000s. 2100, you're going to be gone, right? So in the year 2000, if you put $100,000 in your bank account, by 2023, you take 2%, multiply that by 10, that's 20%, that's 40%. Take another 3 years, 2, 4, 6, 46%. Bare minimum, it's actually worse than that. 46% of your money is gone, nearly 50%. So you have roughly $50,000, give or take a few $1,000 based on inflation in certain years. Like when inflation was upwards of 10%, you were losing 10% in 1 year. You lost $10,000 out of $100,000 in 1 year, minimum. It's even worse than that. The data that these charts are showing you is actually worse than those charts are showing you, because they don't want you to know how bad it really is. And so if you left $100,000 in your bank account, you lost $50,000 of spending power. If you put, let's just say, 1% of your net worth into Bitcoin when it came out, well, Bitcoin pulled, $1 million%. You have $1 million from that. And that was only 1% of your net worth. So if your net worth is 100 grand and 1% is $1,000, if you lost, here's the risk question for you. If you lost 1% of your net worth, would you be wiped out? Absolutely not. That's why you don't invest more than you can afford to lose. You diversify your risk. And that's why I believe in holding gold, and holding silver, and holding Bitcoin, and holding XRP, and the ISO 222 compliant projects, and then also holding real estate as well too, and focus on creating passive income. If you want to learn the #1 way to create passive income online, guys, we're getting ready to launch bullrunners.com, our financial publication platform. We're going to be giving you the latest and greatest news every single day to give you the best to help you prepare for the worst that's yet to come in this economy. And so to subscribe to our daily newsletter to be notified first when we launch, all you have to do is go to bullrunners.com. Link will be in the description below. As always, I will see you on the next video, and I will see you on the beaches of the moon. You know what to do? Stay bullish.